Tech Stuff and Forex Trading Unlocked, and we are here with a Forex trading and cryptocurrency trading market analysis for you for the week of October 25th through the 29th. Real quick, we just want to show you our disclaimer to remind you that this video is for illustrative and educational purposes only. Also, if you haven't done so, please check out our website, forex-trading-unlocked.com, and also subscribe to our YouTube channel or Twitch channel, Forex Trading Unlocked. And if you have not checked out our book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, please do so when you get a chance. All right, we have our live action scene up here. Now, we have the forex-trading-unlocked.com website pulled up. From our navigation bar tab, we already have the workstation tab pulled up. Now, let's take a look at what's going on. Oops, no, we didn't do that. Excuse me. Clicked it. Thought I did. Now I got it. Okay, there we go. All right, step number one. Let's check the economic calendar for the week and see what we have going on. All right, so we do have all kinds of numbers this week, and interestingly enough, we are coming to the end of October already. I can't believe that this year is winding down the way it is. All right, so starting with October 25th. All right, what do we have here? Minor Japanese yen numbers, German numbers, little EU, not much. We have an auction for the US, not too much on Monday. However, Tuesday, let's see what happens here. Building permits. This is going to be a big deal for the United States. It's going to shake up the interest rate markets because building permits have been slowing. If this trend continues, it's definitely an indication of a potential slowdown in the future of the real estate market and what have you. New home sales also comes out as well on Tuesday. That's another number that the bond market will be watching. Now remember, the interest rate market is a component of currency pricing. Without the interest rate market, we don't have currency pricing. So, and obviously for the US dollar, these numbers are numbers that really matter. So we'll have to make sure that we check out these numbers over the course of the next couple of days. Make sure you're very aware of these numbers. Most people wonder why they get caught off guard a lot of times when they're trading. And usually one of the first things is they skip the first step, which is just knowing news events. Remember that news events definitely have an impact on what is going on in the markets. So, and these are ones that you have control over, knowing when you're going to hear about them, unlike things that obviously happen spontaneously. So besides the auctions, that's about it for Tuesday. CPI, though, for the Australian dollar will be a big deal. And then we also have, let's see, on Wednesday, not so much. We do have the crude numbers. I would watch out for durable goods also. That's another thing that you have to look out for the U.S. dollar. Durable goods pricing probably, I would expect. They have it going down a percent as a forecast. I don't believe that's going to happen. Then we have the Bank of Canada rate decision. I don't really expect anything from them, so that would be a shocker if they do something as a surprise. I don't think that's going to shake up the Canadian dollar. I think if anything is driving the U.S. dollar Canada trade, it is oil, which we will get to once we get to the U.S. dollar Canadian cross. So by the way, while you're watching this today, if you don't mind tweeting it out and sharing to your friends, please do so. We would really, really appreciate that. All right, so now let's finish up our numbers for the week. So we have unemployment in Germany. That will definitely help to rock the euro, I'm sure, if it comes out unexpected. And then we have economic sentiment also for the euro. That's something to watch out for on Thursday. ECB deposit rate, not so much. I don't think you're going to have to really watch about those. Those could, if they shake up anything, it would be the euro dollar interest rate contract, which is pretty much at the end, flat part of its curve. It's not moving. It would probably only bounce at a couple ticks. It's not going to influence the euro dollar currency per se, most likely. GDP is something that you have to watch out towards the end of the week for the U.S. dollar. That will definitely be a big number. Initial jobless claims, they've been trending lower. However, I think that's because as subsidies and an unemployment runs out, you have less claims. So there's not that there aren't people unemployed, because right now we still have over 10 million jobs available. So for some reason, jobless claims are going down, but the jobless market isn't. So, and it's not because we're creating new jobs, that's for sure. Just look locally everywhere you go, whether it's urban or in the way out in the country, all the way to the inner city. There is just everyone's hiring. I hear it from everybody all across the country, and so I don't know. People just don't want to work. Let's see. Then we have, let's see. After that, we do have a note auction, CPI for the yen. That is one to watch out. Definitely, the yen is also being influenced by the crude oil rally. As long as crude continues to rally, expect to see weakness in the Japanese yen, strength in the Canadian dollar, though. That's why we're having this pounding of the U.S. dollar Canada once again, which we'll get to. And then we have PPI for the Australian dollar. Okay, on the 29th, what do we have here? For the Swiss, we do have a minor number. GDP for Germany, and also the BOE consumer credit number for the pound. Those will be numbers to watch. Okay, so we've gone through all the numbers of the week. Now let's start off with the Euro US dollar. Let's get these things off of here, make the chart a little clearer. Okay, so as you can see what is going on here. Oops, sorry about that, folks. Didn't mean to, forgot to shut that off, the volume, obviously, as you can see. All right, so once again, we have the Euro US dollar pulled up here. Now, the Euro has obviously been trending lower. It had a nice retracement last week. What's interesting about the Euro is that we have a lot of things that are kind of conflicting as far as bullish and bearishness, where our interest rates aren't really moving except for the market. The Fed, is not doing anything. Central banks around the world are starting to raise rates. The ECB is probably just as torn as the U.S. Fed, so I don't think that's going to be an issue, but oil is starting to become an issue for them. As oil gets higher, the rating, the pricing for oil over there in the EU countries is extreme. So be very mindful of that. That's going to weigh on that currency. So for instance, if the U.S. dollar becomes a bear, against even most of the world currencies, as far as the dollar index starts trending in a very bearish way, it doesn't mean that the euro is going to get a big rally off of that, let alone even rally if it does. That's something you need to be mindful of. So watch out for that. These are all things that we'll be paying attention to over the course of the week. But now let's get into our breakdown of what's happening. So we have the Euro US dollar here, which is obviously trending lower, has had a nice retracement. Now, we had this buy signal that was executed a week ago. We had this bullish engulfing line. Once again, what is a bullish engulfing line? That is a high probable Japanese candlestick pattern. And if you check out the book, High Probable Japanese Candlestick Patterns, on Amazon.com, you will be able to learn about how to trade this signal. All right, so let's see if we have come, how far we have come and where we are going. All right, so remember I said that if the dollar is a big bear, that the euro is not going to be that bullish versus it, okay? So we're going to use Fibonacci here and put the 0.382, the 0.5, and the 0.618 up here. And let's see what we can jostle around. Now, as you can see, last week we had kind of a double topping. We hit big resistance here. Now, this is the big thing is, over here, this is kind of harmonically a good number because we had support here, had a nice big bounce, had a corrective move only, and then we fell down through it, and when we did, we set newer move lows and hitting support all the way down to what was the low here, around 115.24. Okay, so remember, this market isn't a bear market. We had this buy signal here. Whenever you have a counter trend signal, it's typically meant for a retracement. You never try and pick an overall top and bottom. You never try and pick a top and bottom, period. But when you do have a signal for direction, you have to have some sort of direction, right? So as far as hitting our targets, this has not reached it yet. So we still have a little room to go. I would say that if the bull maintains itself, that it has a good chance of taking out the highs of last week above this 116.73 area, but I'm not looking for a big rally. I think that the top that you can get up here is about this, somewhere between the 117.16 and 117.63 resistance band right in here. any trading above here would definitely be very, very bullish and positive this market. However, no matter what, this currency continues to make lower move swing lows and lower move swing highs, and that is indicative of what? A bear market. So as you can see, this area here too, in this 117.16, expect a big fight, because this downward channel that this market's been trending into comes right into this pop. So now be caution here, like I'm sure there's a lot of weak shorts with stops just above this 116.73 area. So with some of the euro numbers, especially with the oil, and if oil continues to rally, I don't think you're going to be able to pierce this upper 1716 area. So getting up into this target zone may become very, very difficult unless it happens somewhere between Sunday night tonight and into Monday or early Tuesday's trade. Anything after that, because see here we have this is Friday, this was put us at Sunday, and then, or excuse me, at Monday right here, which puts us, right here into this downward sloping resistance line. So it may be an overshot rally, and I would use a lot of caution. Now, if we can get above, like I said, 1763, that would be a different story. But until then, we are not on any type of neutral path, especially when it comes to the euro US dollar. All right, now let's go and check out the Dixie real quick. The dollar index, as you can see, kind of went more sideways than anything last week, whereas the US dollar versus certain currencies did trend. Now, what do we have here? We had on the same day, let's see, this is October 13th. Let's go back to the euro US dollar. This was October 13th. Notice that we had this bullish engulfing line buy signal for the euro. Remember that the dollar index is an inverse reflection of euro bull and bear, so euro US dollar is going up, then this is going down. That euro is also the biggest component of the dollar index, so as you can see, it's helping to drive the dollar index lower, but this is also just a corrective move. The dollar index had made a higher move high before it had made in these lows last week. And we also had what is called a bearish engulfing line sell signal in the dollar index that set off this corrective break that we have in the dollar index. So the bearishness that we have in the dollar is reflective of the sell signal that we had in the dollar index that also occurred at the same time in the euro. So now the dollar index, if there's one currency it does look a lot like it, is the euro because of the value of the weight of the currency. But it doesn't mean that just because the dollar index goes one way that the euro will as well. So, but just be mindful of these signals. They are coinciding and they are supporting each other. Now let's look at the British pound US dollar. This is interesting. So we have been coming off of this buy signal here that was set actually back on September 29th. This is called a 3 inside up buy signal. This is also another high probable Japanese candlestick patterns. It's one of my favorite buy signals, by the way. Very reliable and usually gives you a good follow through trend. So whereas it takes a few days to, or upwards of a week or so to manifest, but it usually gives you a good bang for your buck with a lot of risk reward. And obviously if you read the book, you'll learn how to place that risk and potentially reap the rewards. Okay, so off that buy signal, where are we? Okay, well, we've already hit the targets. So the question is this done or not done? So as far as Fibonacci, we have no reason not to believe that we have hit some very strong resistance. And another question is do we have a chance to sell off? Well, irony is as while the euro and some other currencies are strong versus the dollar, the pound is hesitating. And this is kind of crazy because of the fact that oil is going up higher. So the oil is on the table. There's a lot of issues with trade and also with restrictions because of coronavirus. And I think that's the thing that's weighing on the pound the most, because as things supposedly aren't working throughout the world, and we're looking at numbers that are greater than last year, and we had lockdowns. Now we're not in a lockdown. So the question is are lockdowns right around the corner or not? And I think that's one of the biggest things that's weighing on the UK, because they're one of the countries that had the longest lockdowns and really had restrictions on most of their people and trade and what have you. So that's probably weighing on the pound. Right now, I would key off of the high from the other day. This high right here is our risk level. Trading above here obviously confirms bullish momentum with higher move highs and higher move swing lows on a short-term daily basis. But interim, we are more neutral than anything. And obviously long-term, it's been in a big neutral. It's been going sideways for months. Now, we're right in the middle of that range. So I think that because of there's a confliction, oil makes this bullish, their economy makes it bearish. The Bank of England, it doesn't seem like they're going to be messing with their rates anytime soon. It would have to take a rally or a sell-off in their interest rate markets, making interest rates higher in the market rate terms to give us any indication that you would see more strength on that component of pricing. So yes, so short term, I would key off of a low risk sell against the highs from last week. Trading above there, that confirms strength, and then I would roll with it. If you see dollar weakness, especially versus like the Canadian dollar and most other major markets, then that would probably be you would get follow through from the pound to the upside. The thing is, though, is that when we get to the next European currency, this is what worries me about the pound as far as having big blow-off rallies, is that the euro has been very tight in its average daily range, and the pound has been as well, but the US dollar Swiss has not. So let's say that we are staying here. Let's say that we have a short-term top in the pound US dollar. Where can you bears look to find a target? So let's say that this is where we're at. So somewhere in this little band here, we'll use the 0.50 and the 0.618 fib to give us a little target range. So somewhere in here would be probably where you'd find support in the short run if this is only a corrective move. Sideways is kind of the ways. If you see this range here from $1.3568 up to $1.3618, you have some lows that fall into that category as well as this consolidation off of this buy signal. Where does it become resistance, and then we had our next wave higher? We'll see if this becomes support. That's usually how these things swing if you have a change in trend. So this will be a critical area as far as if you are short. I would be very cautious to not take some profit here because it's not likely that we're going to really hammer resistance. And if we do come down this area and then reverse gears and come up again, that would most likely be a very bullish long-term scenario for the pound US dollar. So we'll see how things are manifesting. In some respects, you can even say that this was a inverse head and shoulders right here. What this is a shoulder, this is a head, and this is a shoulder. Here's a neckline. So we penetrated that. We've pretty much we've definitely hit our target for this buy signal here, which is the 3 inside up buy signal from the High Probable Japanese Candlestick Patterns book. So right now we're looking for a little bit of a turn back on support, even though the dollar index seems bearish. Once again, that's why it's not really banging the index lower, because you have a mixed bag of goods. You have the euro US dollar a little bit strong versus the dollar, the euro strong versus the dollar. Pound is a little indecisive. And now let's get to the US dollar Swiss, because this one is the interesting. Hey, we got someone on Twitch. Hey, how you doing? Nice to see you. Glad that you're tuning in for the first time, it looks like, according to Twitch. Thanks you for interacting on the chat. We always appreciate it. And yeah, everyone here on YouTube and Twitch, don't forget to interact with us, please. That's for sure. And if you want to know about the book, High Probable Japanese Candlestick Patterns, let me give you a link real quick. Here we go. This is the link. All right, copying it and pasting it. There we go. For you guys on Twitch, there you go, and also for you guys on YouTube. And if you haven't done so already, please share our video right now to the public on Twitter and what have you, and don't forget to share it later as well and review it. Okay, so we have the pound US dollar that we were just talking about. Let's get to the US dollar Swiss, which is now, look at this. See, isn't this interesting? Now, we had a head and shoulders pattern here. This is something we talked about if you watch our videos a few weeks ago. All right, so we had a shoulder here, we had a head here, and a shoulder here. So this is the pattern, this is the neckline. We failed, we spiked around, and boom, we fell through. Now, irony of it all is here, you would think that the pound would be the one leading the charge right now. Now, this is a scary trade here because the US dollar Swiss, remember, there's flight to quality for currencies in this world. Right now, obviously, the flight to quality strength of the dollar is very weak because you're getting more of a range and more volatility in the Swiss than you are in the pound and the euro. So that being said, this is either a blow-off extension, which means that markets tend to go out like they come in. This is becoming a very vertical slope. We should most likely find support somewhere around where it is right now, to around this 91 cent area. The reason being is that there's no reason, with the price of oil going up, we do have some strength there against the euro and the Swiss because we produce oil. Even though we are now an importer of oil, we still produce oil. They don't produce oil at all. So that's a resource they don't have that they need, and that usually gives strength for the US dollar in this situation. The fact that the Swiss is so strong versus the dollar right now makes me wonder what's going on with the central banks, and I think that could be where the Swiss may be realigning their currency and purchasing in other currencies around the world and selling the dollar because they may be raising their rates, and we know that there's other central banks in the Eurozone that are already working against the EU and doing that, as well as other European countries, and it looks like other countries around the world are starting to shift from this being at zero interest rates or near it, or trying to be low and start to raise it to curb inflation, for one. Like, it's a myth by economists that you don't raise rates to curb inflation, or excuse me, when you raise rates to curb inflation, that does cause inflation. And right now, they're doing their darndest to cause inflation everywhere. So the next pocket is the interest rates. This will start to put, if you think that we have supply chain issues now and strangulation of the economy, wait until rates start going up. That means the cost of carryover, the cost of every single thing goes up along the process, along the supply chain. So, for instance, crude oil, the fact that once it's drilled and it's moved, there's a cost of transportation, and there's an interest rate charge and a carryover charge, just like there is of any commodity. That cost goes up, just like the fuel cost goes up, which just drives up even the cost of fuel, let alone the cost of everything else that you transport, that you need fuel to transport, blah, blah, blah. It's a domino effect. So we'll see how these variables really start to become an issue, which, let me tell you something, if you think it was scary back in the George Bush era with the gas prices, just wait until 2022, because I predicted $100 oil back in January. You can look at all the shows that I'm interviewed on. Like, it's been something that's been rocking my world for a year, and as we've been getting closer, it's like, hey, we're getting there, and now all the big pundits, after we hit 80, they're like, oh yeah, $100 oil, I guess that is kind of rational now. It's because they're all on the other bandwagon. They don't want to admit that policies in our government are causing all this stuff. So whatever the cause, it doesn't matter. The markets are moving. So where are we going from here? All right, so as far as the sell-off from the head and shoulders, irony is this head and shoulders here was also a 3 inside down sell signal, which is a high probable Japanese candlestick pattern. All right, so as far as support, where are we at? Well, we came into a very critical area on Friday. Boy, did we hit it. And this is why I'm saying be careful with this oversold nature and strength in the Swiss. For one, this is a very big digestion area, excuse me, where we had found support along the way for months. We nailed this right here pretty much to the pip as far as what the low was on Friday for a 0.618 retracement off this high from this swing low to this swing high. Overall, the US dollar Swiss has been a bull. Now, we did break the small trend on the US dollar Swiss on a daily basis last week. Doesn't necessarily mean that we're overall bearish and a top is in the market. It just means that this correction has been extended. Now, markets go out like they come in. If this is going to have follow through, then yeah, we could see this market get all the way down towards testing support below 91 cents to 90.5. I don't think that that is going to occur with rallying oil prices. And we also have to watch the interest rate market for the United States, because the 10-year market, 10-year note and the 30-year note had a rally over the past second half of last week. That gave weakness to the dollar, so be cautious. If the oil market is up, and if you see the 30-year and the 10-year notes breaking on Monday morning, that is a good indication that the dollar strength is going to come flying back for Monday morning, meaning that if you are short right now, or if you're an aggressive seller right now on the US dollar Swiss, you're probably selling it in the hole. So you don't want to do that. You're going to get caught off guard and all of a sudden have a whipsaw rally right away. So if you're going to be short, if you're not already in the short trade here, tighten up your risk, because I would be very cautious. It's either going to get very choppy. As you can see, there's a lot of choppiness in this range between 91.60 and 91.92. It's a 30 pip whipsaw where you can see a lot of short-term low-risk traders that are just taking a quick short or a quick long. Day traders, you're going to get chopped up. I'm just telling you, beware. This market has been trending for the past month, since the beginning of October. However, if you look at it, it really hasn't been trending. It's been hitting a swing point, bounces back, but then it gets locked in this half a point range every day, which for this doing the active behaving like this while the pound and the euro are pretty quiet makes me worried that you're going to see a snapback rally. So as far as support, we've hit key support right here. Any failure from where we're at, well, obviously we're making lower move lows and lower move highs. The short-term trend is bearish. I just think that it's overextended. So I would use cautious and watch the other markets and wait for a signal, that's for sure. Now, if you're going to be a buyer here, I would also use caution. Wait until Monday morning, see where things are at, maybe even wait for a confirmation with the close of Monday that we have strength, have something to work off of, because right now the low here is in jeopardy. So we'll see what happens and see how that manifests. Now we have the US Dollar JPY. Here's one that I'll tell you what, wow, this market has been trending very, very strongly. The trend is obviously bullish. We had hit our 114.5 high target a week and a half ago, and what was our rationale last week and what would happen? Well, I'll tell you what, we were surprised to hit it already last week. What was it, on October the 20th? We got to a high of 114.69. We had 114.5 as our overall short-term target before we have a potential correction back to support. The rally that's been going on here is attributed to oil. The oil trade is back on the table for currencies. It was off for a good few months while it bobbled around in the 70s, but now hitting the mid to upper 80s and looking for a shot at 100. It is just bearish the yen, no matter what other economic and political factors you want to throw at you. A big steep rally in oil is not good for Japanese yen. It's very weak for them. And remember, there's some Bank of Japan stuff that's going to be coming out this week too. Be very mindful of what that happens. So the yen right now is having a 3-day sell-off. Looks pretty bad. However, if you look at the way it sold off before, it had a nice little consolidation here, and then it came back up. So I would use caution if you're short here in the US dollar yen. Now, for compliance sake, we are long the US dollar yen, just like I'm long the US dollar Swiss. So both positions right now we're taking heat on, but we're looking for this to turn around. So I have an overall trend target of 116 in the US dollar yen by the end of the year, with 122 by April of next year. However, with the way oil is going, we may see 122 by probably maybe even the end of January or February, not April. So this trend here, do I think the US dollar yen is going to maintain this steep trend? Absolutely not, but I do believe we are looking to find a little support base, and then, yeah, we're going to rally off of that again. So as far as a correction here, if we go to the 50% mark and we go to the 0.618, there is a nice degree that this market can sell off. So I would use caution here. Like, if you're not long this market, wait for a buy signal. Don't just jump in. I would, if anything, lowball the market. Start out down here, and you can always lift it, whatever. I would just use caution because there's a lot of space here to find support, which would just be a higher move swing low before the market could make a higher move high again. So right now it is in a corrective phase. So be mindful of that, okay? Just make sure that you're paying attention to this. So, all right. So how are we going to go on Sunday and Monday as we enter the week? Well, I think that we've had a nice little momentum here, sell off, and you're probably going to still see a little bit more of a break. So let's use the last swing low here and this here to try and find a little better range. All right, so even if we have a minor sell off this week and find support here off this last wave, we're still looking to come down this 112.74 down to 112.29. So if you're looking for a low risk buying area to start to look for support in this US dollar yen trade, this would probably be the good area to look for. Remember, we have 116 as our overall longer term target, which I think we can reach before the end of the year. So if you're looking at what's our target as far as this, here's December 31st. Okay, so here's our timeline. So we're looking for us to find somewhere in this area. Now let's find the right drawing tool. Here we go, the brush. So somewhere around here, and then continue to trend up into the end of the year here, or we come down into here and do that. So now, will we get all the way up to 116? I don't know. We'll see. But somehow I think that the way the pattern is going to go is we're going to come down into this area, or maybe even find some support here and work our way down to here before we get up there. As far as a bearish scenario, these would be areas where I think you could find some good support and some good buying opportunities. As far as whether or not we're going to get all the way to this extreme one, that's a really good question. I just don't see it with crude. Now, if we had a big sell-off in crude and a big rally in the 30-year bond and 10-year note for the United States, then I could see the U.S. dollar yen getting down to this 111, even to 111.70 area. But it would take a big move in both of those markets to shake up the dollar enough to, I think, to really to perpetuate that kind of sell-off. So be mindful of this. And we'll see what happens as the week unfolds over the course of Sunday night into Monday. But it's most likely the scenario here that this is where you're going to see the yen going for the rest of the year. Once again, because of the commodity trade. The Japanese don't have oil resources, so they're very oil dependent. And on whom they also rely and they used to rely on the United States, but since we're not a net exporter anymore and we are an importer, that really hurts our ally. Because, yeah, guess what? We were exporting oil to Japan, and we were definitely a backup source in case of any supply issues. We are no longer that. So that hurts the yen. That gives strength in the dollar against the yen. Not that it gives the dollar strength. Overall, it's just the dollar versus the yen. Okay, now AUD USD. This has had an interesting bull run. It had a sell signal here on Thursday. It is a bearish engulfing line. Once again, another high probable Japanese candlestick pattern. And if you read the book, High Probable Japanese Candlestick Patterns, you can learn how to trade it. But right now, we're going to show you here that if you are a seller below 75.51, this is your risk level. Any trading above here, I would use caution. As far as how high can this go, well, the momentum you can see is very steep. Irony of it is that this whole rally for this correction started with a high probable Japanese candlestick pattern right there. That was on September the 30th rather. This here is a piercing line buy signal, and boy, did that take off. Now it's ending with, or maybe ending, we'll see, with a high probable Japanese candlestick pattern. Now, obviously, we had made this low here, lower move high here, higher move low, now higher move high. So that puts us in neutral, not bullish for Australian dollar, US dollar overall, just because of what's going on economically and fundamentally over there. Now, the price of oil is definitely helping to prop up Australia. However, they have supply chain issues and distribution issues and a whole bunch of other ones that means doesn't matter how high oil goes, it doesn't mean anything if you can't get it out of the ground, let alone send it anywhere. So that's why we're probably going to have a good chance at having a corrective move down into this area around 74 cents down to 73 cents. And we'll use this last swing low and swing high as our basis here. There's our 0.50 and our 0.618. There we go. All right, so here is our corrective downside target. So between 73.19 up to 73.62. Somewhere in this area, we're looking for a correction. If this market is going to be bottoming, being neutral to higher, you're probably not going to see it get much lower than that. We do have the beginning of potentially a turn in the market. Maybe. We'll see. There's a lot of factors that could come into play. With the lockdowns in Australia, that's the thing that's restricting the Australian dollar. Now, if all of a sudden they were to lift the lockdown mandates, even to some degree nationally and in many other states, because some of them are in complete lockdown, some are in mostly lockdown. I don't even know what that means on Australian terms, but if they do lift those things, then you could see probably a big, like a balloon underwater rally. So make sure with your risk, if you're short, definitely don't have anything higher than 75, 55, 51 here. So 75.60 I would say would be your breakout point. Anything above there, you don't want to be short, my friend, that's for sure. So if you're an aggressive seller, this would be a good time to do it. If you're looking to be an aggressive buyer, I would use caution and wait for a dip, because obviously there's a good chance that we'll be pounding support for a little bit. Now, if oil really starts to pressure the highs, and if you see the 30-year and 10-year rally, meaning interest rates go down, those pressures would definitely give strength to the Australian dollar, US dollar. New Zealand dollar, US dollar. Okay, we got a couple more currencies to go, then we're going to get to the cryptos. I want to thank you guys for hanging out with us today on YouTube and Twitch. Please don't forget to subscribe to our YouTube or Twitch channel if you haven't done so already. Always go to forex-trading-unlocked.com for your Forex trading needs. All right, so New Zealand dollar, US dollar, very bullish in the last couple of weeks. This also had a... Okay, there we go. This is a dark cloud cover sell signal, which is another high probable Japanese candlestick pattern. Once again, you can learn about how to trade that in the book. All right. So as far as a short-term retracement, now this one's a little bit more bullish overall than the Australian dollar, just because they're not quite as restrictive in the lockdown situation as Australia is. So right here, we're looking to correct back to the neutral zone, the big chop. So overall, New Zealand dollar, US dollar, we see more strength here than we do in the Australian dollar cross. However, we still see the dollar being stronger overall. So we'll see how we get through the fall into winter. If New Zealand stays where they're at, they'll probably be neutral to just chopping around in this big range, somewhere between 68.5 and 72.5 up here for the next, like, probably, and I'm not kidding you. See how we did this from June, and it just kind of, we spiked up. We set the higher boundaries, lower boundary of the range. Now we set a higher boundary of the range. We're pretty much going to be trading all through this area, like I said, from 68, let's go 68.5 up to 72.5. This is it. It's a big swing trade. Watch out for these buy patterns. Once again here, when this set off this rally right here, we had this slide here followed by these two up days, 3 inside up, buy pattern from the High Probable Japanese Candlestick Patterns book. We spoke about that pattern in another market earlier. So these things do occur over and over in the markets. Ironically, they happen around swing points where you have highs and lows. And the one thing they help to give you is when to define risk, where you draw a line in the sand. Like for instance, with this sell signal right here, this high plus a few pips, that is your line in the sand. If you are a short going against this right now, short-term uptrend, following this sell signal, you would be knowing right here that your risk is just above this. So what's your reward? All the way down to here. So think about had you sold this right here at the close, 71.55. So 71.55, you'd be risking, that's let's see, 63 pips for a break all the way down to 70.39, which that would be what? That's 100 and that would be 116. So up to, we have 69.97, which is even adding another 40 pips there. So using this as your range for targets, especially the 69.97, you're looking at a 3 plus reward risk to 1 ratio, which is huge for that kind of a sell signal. So as far as what's your potential over the next month or next week and a half to 2 weeks and hitting that, I don't know. We'll see. It depends on how the strength in the dollar does or doesn't go. But we have a short-term sell signal that is targeting this area. As we can see that the dollar has been under pressure from the dollar index. Remember how we looked at that before? But it's kind of waning. And we'll see whether or not we're going to get a bounce in the dollar. We could go sideways in the dollar, which means all of these currencies will be doing their own thing. There's divergence in the markets, which we've seen for a while. All right, now what do we have here? Well, we have, interestingly enough, remember how we are bullish the Canadian dollar because of oil? We do have a short-term buy signal here, which is right there. So we have a bullish engulfing line that has this market targeting on a short-term basis right up into this area here. If this is just a correction, and that's what I would be mindful of, is that if you get a US dollar, Canadian dollar rally right now, I think it's a rally to sell. I think that the Canada, no matter what, because of oil and rallying price of oil and the relationships between the US and Canada, that you're going to see a continuation of the downtrend. Now remember, US dollar Canada had been in a nice big correction. We had a shoulder, head, shoulder. We finally came through it. Now we're sliding. This market right now is in a big neutral. Long-term bear, short-term it is not a bull. It just has a counter trend buy signal. Okay, so key off of the low from Thursday. And if you're an aggressive buyer, it's the same situation like the last market we talked about. You have a good chance here. I mean, right now, if you were the market's at 123.65, you're looking at only a for like 80 pips. That would be your risk here for a trade that you're looking for it to go all the way up to 25.32, up to almost 26 even. That's a nice swing trade. I would use caution once it gets up to that level. Remember that right now this market is in a short-term downtrend. No matter what, it's coming off of lower move lows, lower move highs. Okay, so be very, very cautious about this. And look at this. See how steep this is? So it's going to have a lot of resistance that comes right, especially like if it came in right now. So right now, we'll see it has to get it through this downward sloping resistance line here. That would, by attrition, take all the way until next week for that to happen if it goes nowhere. And if it goes nowhere, could that be basing? Maybe, and then maybe give us a nice rally up to here. But remember, it has to hold this $22.84. Any failure from here, the trend is your friend. It is a bear market. I would not fight it. The price of oil rallying will help to drive this. And so if that happens, if we're hitting support on US dollar Canada with a rallying oil market and also a rallying interest rate market for the US dollar, meaning lower rates, weakness in the currency, that would also gain strength for US dollar Canada bears. Okay? All right, now it's time to get to the crypto. So crypto, BTC, USD, speaking of high probable Japanese candlestick patterns, We had a bearish sell signal, bearish engulfing line that went off a couple days ago. We talked about this in one of our other videos last week in one of our talk shows too that we were interviewed on. Short-term sell signal, not a bearish thing. The market is in a bull trend, but right now we are calling for a counter trend sell signal. Anything above 67,149 obviously has this market making higher move highs. We're looking for a corrective move right now. We are not bearish Bitcoin, but we are short-term bears, only looking for a correction. So here is your defined risk. It was the high set the day before, this bearish engulfing line sell signal, this long red line. And we have our support area right here. Okay. And this is where we're looking for the market to get down to. Okay, so this would be about, I think, the extent to where you would go. You see this high came in here. This was a big breakout. It was a lot of resistance here, choppiness. This was where it was trouble getting above here, and now it's going to probably become support. So we'll see for it to come down to this area. Remember, at these levels, that's not the biggest correction in the world. A 20% correction in Bitcoin is nothing. With the way this market swings. Remember, the Bitcoin, we look at it kind of like the dollar index, even though it's not. But there is some confluence there because of the fact that Ethereum network runs on it, and there's all kinds of offshoots. So certain things are integrated with it that gives the technology and the value of Bitcoin support, where other cryptocurrencies do not have these values. So right now we do have this sell signal, short term. I think you're going to find a lot of buying pressure here around 53,000 or just above it. But still, we have room to go. As you can see right now, it is trending lower on the daily. On the hourly, it's just a grind. It's slowly hitting support. I would say that it's for lack of buying right now. You think you'll have a lot more buying at 50,000, 53,000 than you do up in this area. You have probably a lot more people liquidating in these areas than you do purchasing right now, and that's probably why it's grinding lower. All right, so we have a downside target there. ETH US dollar, this one as well. Now this one topped out before Bitcoin did. However, this one seems to be, no matter what, it's trending higher. We don't have a sell signal. Be cautious with this market. Trading above 43.78 definitely has this market bullish as it makes newer move highs. Key off of this $3,600 level, 36.34 rather. Trading below here will have us in a big chop. Now, I have a fair value of Ethereum between basically 22 to 2400 is a solid buy range no matter what, for the longevity of this cryptocurrency, and 3800 to 4000 is my cap on the pricing. So I own this. As far as, am I liquidating any right now? I'm really on the fence with this one, just because I think that it's time to lay off a little bit and then look to buy back some when it gets back below 3600. Just because I think that's the longer term fair value of it right now. I think it's overbought, and unlike, no matter what, the technology, in order to remain viable, has to be cost effective. The more the value that is perceived with Ethereum, the more the cost of other offshoots and altcoins that run on the Ethereum network and what have you, the cost of running them will be, the values there. And it starts to gum up the premise of what the payment systems and how you want to use a lot of transactions to make them cheaper for whatever industry use you're using them for, or whatever use you're using them for. So if you start to make everything more expensive, then what's the whole point? You know, you can use, if these things are supposed to be alternatives to other things and reduce costs, but if all of a sudden they become more expensive, you get the point, it becomes a bubble. So I would use caution buying at these levels. I still think it's a good value, but I wouldn't be shocked if you see this market come below 3600 and find support probably between 3,000 and 3,400. It seems like that's a very good agreed upon base. And yeah, I think that's what you're going to see. And as well as we have a lot of things going on in the economy, I think that you have a good run. And as we get into the end of the year, you're probably at these levels. There's no reason why people wouldn't take some profit. You got inflation in this world. People need money too to buy things. So they can't buy anything with Ethereum, so they're going to have to cash out of Ethereum for one. rotate it into something else, at least to move it into dollars or a pound or whatever you want to do. So that's another thing I would be very mindful over the next month and a half as we approach the holidays. Is anyone that's had a good run, they could go on a buying spree and be like, okay, well, I've made the money. I may have to wait 6 months for that Ferrari, but I'm getting it, or whatever we want to. I don't know how many billionaires or millionaires have been made from the crypto markets, but I wouldn't doubt that you see a buying frenzy going on, especially before the new luxury tax increase goes up next year also. Yeah, they're being very quiet about that one in the new package. All right, XMR US dollar. Okay, XMR US dollar, Monero, at a very fair value price. This is one I like around between 180 and 220. I think it's a solid buy. This is another one I think he runs out of gas once you get in these mid 300s. I think overall you could even be at 450, 500. That's the cap, because the pricing issue becomes the sustainability of the technology. It becomes a different issue. So I'm pretty sure that Monero will be bouncing in this range, and that's the kind of environment that it's going to sustain regardless if Bitcoin goes to 200, 300, 400, 500,000, a million, whatever. And not that, who knows, maybe all cryptos will explode to nth degree as well just because of that. But these are all transitory inflationary stores of value, where eventually you have to ask how long does the fantasy last? Well, the reality is the higher it goes, the more of something else of value gets pulled out and gets actually converted into real things, the less value there is in these other things, because you've pulled all the people with the money. Once the money's been put in and pulled out, you need more money to come in, and that's the question: is how much money is going to come in when you have, like, say, Bitcoin at 800,000? Your potential for investors, let alone any type of action, becomes restricted on a very big level. So that's getting ahead of ourselves, but right now we are where we're at. Monero, very neutral. We don't have any true buy signal or sell signal here. I would key off of this low right here. If you're looking to buy anything below 251 here, I think you start to find very good value. Anything above this area here of 296, 300, I would start to shave off some profit, looking to buy it back in this range or lower. So I think you have a good trade there. It's just a matter of playing that range trade. Also, for compliance sake, we are long Monero as well. So just to let you know. All right, now let's look at something that people still keep asking me about, and I don't know why, but Doge, here we are, big neutral, chopping around this 25-cent area, blah, blah, blah. What are you going to do with it, right? This one here, there's nothing really to say. Buy it in the teens. I know people that say, I was going to buy it at 30, get rid of it at 40. Well, we're having a lot of trouble getting out of the 20s here. We can't even get above 28 cents. I think the strength you have here is because of all the other cryptos getting a natural lift. Remember, we had this BTC US dollar sell signal. Let's go back to that. Remember, we're going to use this as our dollar index for the cryptos. Let's say we get a slide back down to this area here for Bitcoin US dollar. Then Doge has the likelihood of getting all the way back down to 20 cents or back into the upper teens. Does that mean buy it down there? I don't know. We're making lower move lows and lower move highs. That's an indication of a bear market. We really don't have a buying indication here at all. I would say wait till it gets down in that area, I guess, and if you want to take a chance there, see what happens when you get a big rally in Bitcoin or whatever. But if you have a big smashing, let's say you have Bitcoin go into another bear trend like it has done in the past. Unlike the stock market, Bitcoin has had bear markets. In that situation, Doge could make new lows, get back to, who knows, 5 cents a penny. So, and then it would be a buy. I don't know. See, here's the problem. The technology is not embraceable or sustainable. The only ones that seem to embrace Dogecoin are the ones that are caught long at higher levels, trying to figure out how to pump and dump this thing back up so they can get out and get some new suckers in and get their money out. And that's the way I look at it. I hate to say it. I'm not down on all cryptos. I am down on Doge. So I can't rationale a reason for any long-term value in Dogecoin. Now, I could be wrong. This thing can go to $1 million for all I know. Well, who knows? So we'll see. But right now, yeah, not much to say about this one. Sorry, Doge addicts out there. It's range bound. Wait for a breakout. Wait for a signal. We got nothing. All right. So now let's go back to Euro US dollar. Remember, once again, this is where we started. We're looking for a little bit of movement here, but key off of the dollar index. And remember that where this goes is most likely sideways, riding support early in the week. That's because we have a lot of indifference, okay? So there's no longer the dollar ruling the trend versus all the currencies like it did during the COVID pandemic, during the beginning of it, where it was all currencies versus a dollar for the most part, okay? So we have a divergence in many currencies. We have a lot of divergence in other currencies against themselves. Remember, there's all kinds of crosses out there, and these cause ripple effects and cause the gyrations that happens in the crypto space. All right, so thank you very much for hanging out with us here. Remember to come to forex-trading-unlock.com for all of your Forex trading needs. Follow, check around our navigation bar, products, courses, and services. Check out the book, High Probable Japanese Candlestick Patterns, right here. This will give you some insight into the book. It'll give you a little video about the book, and it also has the cover where you can buy it if you want. You can share it if you want. We'd like it if you would share it and just check out this page anyhow. And you can preview it also as well. So, and if you want to buy it, it will take you right to the Amazon page where you need to go. Soon we will be having the hardcover version available. So we are not reducing prices. We are just having, finally Amazon will be making hardcovers, and we are going to have one as well. So they look a little nicer, they last, they are definitely more durable, and they hold up on your bookshelf a lot easier too. You don't have to lay them flat. So, but anyhow, I want to thank you once again for your time today at forex-trading-unlock.com. And remember, if you haven't done so already, to please go to either Twitch or YouTube and subscribe to our Forex Trading Unlocked channel. That way you will know when we have our streams going and glowing. And also remember once again to check out that book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. If you haven't seen this whole video, go back and review it. If you did, go back and review it again so you got a good indication of what's going on this week and see how things shape up as well. So we want to thank you for your time, and you have a good luck with all your trading this week. If you leave some comments also on our videos, and we will answer them when we get a chance, okay? And we'll probably bring them up in our next video. So all of you that are staying tuned right now, we will have a live stream coming up later on and get this week.